You know, what's the one thing that separates a losing trader from a real professional? It's actually not about being right all the time. It's about a complete and total transformation in how you think. So today, let's break down that journey from amateur guesswork to a pro-level system.
It really all starts with this classic trading paradox. It's just human nature, isn't it? To grab a small profit because you're terrified it's going to disappear, and then to hold on to a losing trade, just hoping, praying it'll come back. The entire journey we're about to explore is about flipping that exact self-sabotaging instinct on its head.
So here's our game plan. First, we're going to decode a trading record to find the real story hiding in the numbers. Then we'll face the tough realities of the live market. From there, we'll lay down the golden rules you need for survival. And finally, we'll see the complete transformation into what's called a trend trader.
Okay, so our story kicks off with a new trader. He's showing his practice, his paper trading results to his mentor, the rich trader, and he's feeling pretty good about himself. But the numbers, well, they tell a much deeper story. First up, the win rate, 60%. I mean, that sounds fantastic, right? If you're right more than half the time, you have to be making a ton of money. But is that the number that actually matters? His mentor is quick to point out that, hey, maybe a roaring bull market just made him look like a genius. But this is the number that really, truly matters, the payoff ratio. For every $1 he lost, he made 2, a 2-to-1 ratio. This is what his mentor calls excellent, because it's so much more important than just the win rate. It proves he was already doing the single hardest thing in trading, letting his winners run and cutting his losers short. With a great payoff ratio like that, our new trader is feeling invincible. He even says paper trading is like shooting fish in a barrel. But his mentor immediately brings him crashing back down to earth. Why? Because practice trading is like a sterile laboratory. The real world, though, that's a battleground. You're fighting against commissions, slippage, which is that tiny price difference that works against you between when you click and when the trade actually goes through, and yeah, even your own internet connection. And this is where we get into the hidden dangers of the real world, all the things paper trading can never, ever prepare you for.
So put yourself in this spot for a second. You're sitting on a massive winning trade. You feel like a genius. But the company's earnings report, which is a total coin flip, is just hours away. What do? Do you risk it all, cross your fingers, and hold on?
The mentor's answer is absolute. Never. Not a chance. Why? Because an earnings announcement is a pure gamble. It's not a trade. The stock could absolutely crash, even if the earnings are great, or it could soar on terrible news. It's what he calls the Wild West. It's completely unpredictable. The professional move is to take your profits before the announcement and protect your money. And believe me, the hurdles don't stop there. Just think about it. A single round-trip commission could completely wipe out a small win. A power outage could trap you in a losing trade with no way out. And a system that looks absolutely brilliant in a bull market, it could get completely destroyed when things turn sour. All of a sudden, those huge paper trading profits look very, very different, and a real-world return of maybe 20–25% starts to sound pretty darn good. So, how in the world do you navigate this battlefield? You don't just need a strategy. You need a non-negotiable code of conduct. You need the golden rules. Okay, these are not suggestions, they're rules. Number 1, never ever add to a losing position. That's just throwing good money after bad. 2, risk management is your everything. Never lose more than 1 or 2% of your total capital on any single trade. Period. 3, swim with the current, not against it. You trade in the direction of the overall market trend. And finally, number 4, never enter a trade without a complete plan that tells you exactly where you'll get in, where you'll take profits, and most importantly, where you'll cut your losses. This all leads to probably the most important mindset shift a trader can ever make. You have to learn to detach emotionally from any single trade. A win doesn't make you a genius, and a loss doesn't make you a failure. All that matters is this: did you follow your plan? Because you're not playing for one trade, you're playing for the next 100, the next 1,000. It's all about the process, not about trying to predict the future. And after really internalizing these hard-won lessons, after surviving the real world and committing to those rules, our trader goes through a fundamental change. On that day, after the mentor's brutal, honest review, he makes a decision. He finally realizes what this whole journey is about. He was no longer just a new trader chasing hot tips or trying to trade based on gut feelings. He was a trend trader. He now has an identity, one that's built on a system, a process, and a set of ironclad rules. This right here is the transformation from amateur to professional. And this whole thing comes back to this powerful idea from the legendary investor George Soros. He said, "It's not whether you're right or wrong that's important, but how much money you make when you're right and how much money you lose when you're wrong." That's it. That's the whole game. A 60% win rate means absolutely nothing if your few losses wipe out all your wins. The entire game is about one thing: making sure your wins are bigger than your losses, and that, my friends, is the ultimate lesson of the trader's transformation.